this video, I'm going to show you how to defer depreciation recapture with a 1031 exchange. Real quick, a 1031 exchange is when you defer taxes, sometimes forever, when you sell one property and buy another property with specific rules and timelines. How do you defer depreciation recapture with a 1031 exchange? Well, guess what? Since you were able to do a write-off every year against your income on your rental property, when you want to sell it, the IRS says we want that money back and they're going to tax you. So the first thing you do to find out what the situation will be is to figure out your depreciation that you took on the property or that was allowed. And what does this mean? The IRS says you are entitled to take the depreciation. And let's say you either forgot or didn't care or whatever you did, but you didn't bother to take it against your income. You still have to pay it back. So taken or allowed, there's some very significant words from the IRS. So that's one of the reasons why you have to understand depreciation in the first place, is you want to make sure that you're not going to be taxed on something that you didn't take advantage of. How to calculate depreciation on your rental property. Number one, what is the purchase price or the value of the property when you acquired it or received it? In this case, I'm going to use an example of $400,000. Number two, you have to separate the land value and the building value, because remember, land cannot be depreciated. Only buildings can be depreciated according to the IRS. And you really don't have a property that's going down in value. What you do is have it as what they call a paper loss on your taxes. So this is a great advantage to you if you take depreciation. Okay. Now, you have a residential property, and there's a rate that's defined by the IRS that you can take every year. That rate of depreciation for a residential rental is over 27.5 years. So this is how you calculate it. Take the building value, which you've determined in this case to be $320,000, and you divide it by the 27.5 years that's allowed by the IRS. Then you multiply by the time you owned it. In this case, we're using 10 years as an example. So each year on your taxes, you depreciated the property just a little bit. And we can calculate over the 10 years how much you did depreciate it. And the reason you depreciated it is because it offset or counteracted your income for that property. So it actually was a tax benefit to you to write this off. It's called a write-off. Okay. Over the last 10 years, the number totaled $116,364 in this example. You took the $320,000, divided it by 27.5 years, multiplied it by the time you owned it, which is 10 years, and then you got this number. Item number 4, you want to talk to your tax advisor. You don't want to just calculate this yourself. This is an example. And the reason you don't want to calculate it yourself is because you may have improved the property. Maybe you put a $25,000 roof on it. Maybe you built something onto it. Maybe you built a garage, something that would change your numbers. After you know what your depreciation taken was, in this example that we used, it was $116,364, okay? You need to figure your ordinary tax rate, because when you deducted it from your income tax on your rental property statement, you actually saved your ordinary income. In this case, they want ordinary income back, so it's going to be taxed at your ordinary income rate, but there's a maximum on it of 25%. So in this particular case that I'm showing you, and should be considered even though it's an example, the maximum tax rate that's going to be taken on ordinary gain in a depreciation recapture is 25%, and I'm considered 25% in this case. Now, in this case, it turns out to be over $29,000 in taxes, just depreciation recapture. And to me, that's a lot of money. And if you can postpone, defer, avoid paying that recapture tax, that's a real big benefit. So number 3, what you want to do, given this knowledge that you have, is talk to your tax advisor. Number 4, the way to defer it, $29,000 in this case, defer it for forever is to do a 1031 exchange. Oh, and if we haven't met, I'm Maxine Golden. I'm a longtime real estate broker, and I started the 1031 Exchange Lady channel because I believe you deserve the same tax breaks as the big investors. The law says you do, and you do. But don't take my word for it. Ask the IRS. Ask your tax accountant. They will tell you the same thing. So I specialize in helping rental property owners like you across America find qualified real estate agents who are experienced in helping you with your 1031 exchange. So you can ask me a question in the comments below or check the description and book a call. I look forward to seeing you in the next video.